Very good. Hello, everyone, both in the room and online. Thank you very much for joining us for this penultimate session of the SME Assembly. Thank you also very much to the European Commission and the hosts here in Slovenia for an excellent event. And since we're running a little bit late, I'm going to be very brief in my opening statements and just say we're going to talk today about one of the most pressing issues we have right now. It's about the recovery and how to ensure that we move towards more resilient economies as we come out of the current COVID-19 crisis. To tackle the question of what we can do, especially for our SMEs, are with me three distinguished panelists. We have Uti Slotboom, the Director of Strategy and Economic Analysis from the European Commission, DG GROW. We have Lucia Cusmano, the Deputy Head of Division for the Entrepreneurship, SME and Tourism Division of the OECD, and Ben Butters, the Chief Executive Officer of Eurochambers. And with this, Uti, I would like to invite you to the podium and ask you, what has the crisis revealed about the main problems of SMEs? What are lessons for policymaking going ahead of the crisis to ensure that we have resilient recovery and strategies for future challenges?
Thank you. Thank you, Alexander. Good morning, everybody. Very happy to be here. I wanted to say some words about the annual SME report that we publish and other Commission service, and some words on the policies that we are pursuing to help SMEs into recovery and resilience. SMEs, as everybody knows in the audience, have suffered heavily during the COVID crisis. According to our estimates, employment declined last year by almost 2% in EU SMEs, and value added declined by 7.5% year on year. The impact of the pandemic depended heavily on the sector. The differences between the sectors are huge, while if you look at individual sectors within countries, you see a lot of similarities, meaning that this was a crisis that hit sectors like tourism very heavily. The ones which fared better were sectors like digital services, which managed to continue to increase their value added despite the pandemic. Now what we are seeing is a gradual return to post-pandemic levels of output and employment. We are not yet there, but our expectation is that we will soon be at the level of the EU as a whole. Last week's Commission's autumn economic forecast expects GDP growth for the EU as a whole of 5% this year, 4.5% next year and 2.5% in 2023. But this is heavily conditional on how the pandemic evolves, and there are significant downside risks to this forecast. Also, the existing supply chain shortages and vulnerabilities are another significant downside risk to the forecast. During the pandemic, as we know, demand collapsed. What we see now in the latest surveys, which the Commission carries out among business managers, is a change in how they see the biggest constraints. When business managers are asked what they see as the biggest constraint limiting their production capacities, they no longer say, as of this autumn, that it's lack of demand. Now the situation has changed, and the biggest constraint is supply shortages, lack of access to equipment and materials they need. Also, lack of labor is quoted more frequently than the lack of demand. So we see a clear change in the situation, and we are moving into a new stage in the recovery. In the context of the annual report on the SMEs, we carried out a dedicated survey on what obstacles SMEs see to their operations. The most often quoted issue was late payments. SMEs suffer heavily from the fact that when they deliver goods or services, those who receive them do not pay the invoices in time. And the situation, which has always been a huge challenge, worsened significantly during the pandemic. Almost 40% of the SMEs which participated in the survey quoted late payments as the biggest problem. Another issue, as I mentioned, lack of access to critical raw materials or equipment was quoted by more than 1/3 of the SMEs in our survey. And almost 1 in 5 SMEs reported problems with high prices and difficulties in finding alternative supply sources. Also, almost 1 out of 5 quoted hindrances in exporting. SMEs are gradually coming out of the pandemic crisis, but in general they are coming out of the crisis with a significantly weaker financial situation than where they were before the crisis. As of the coming months, enterprises will also see a gradual withdrawal of at least some of the national public support measures. As you know, the Commission has authorized a temporary state aid regime to help member states cope with the pandemic. This is still in force, but the Commission proposal is to start a gradual withdrawal. There are still other challenges. One of them is the high increases in energy prices, which put a burden on many SMEs. What I would like to say on the return to normality is that the return will not be a return to the economy as it was before the pandemic. A lot of things will have changed. Some of the changes in consumption patterns, they may have become permanent. For instance, consumers during the pandemic started buying through internet much more massively than was the case before the pandemic. Most likely, a lot of that will stay. The labor markets are changing. Teleworking may have become a permanent feature of how we work in the future. Also, new forms of working are increasing. A big challenge for all of us is fighting climate change. This has led and will lead to new policies at the EU level and in the member states. These will also have an impact on small businesses and large businesses. And finally, the last thing I wanted to mention is the digitalization of the economy, which accelerated significantly during the pandemic. SMEs need to be ready to work in the new digital environment and be part of this change. In that respect, the results that we got from our SME performance review survey, which we published last summer, are somewhat worrying. Especially smaller enterprises, microfirms mostly, are at the very beginning of their digital transition. Of the microfirms, only 20% have their own website or app. Only 9% have experience with trading on common e-commerce platforms. For mid-sized SMEs, the corresponding figures are almost 40% and 26%, a huge difference. What is possibly even more alarming is that when we ask the smaller firms why they do not use e-commerce, why no company website, almost 60% say that they don't see this fit into their business model. And this, in our view, is something that requires deeper reflection. The society is changing, consumption patterns are changing. Things like being able to sell goods through a shared e-commerce platform or having a company website have become self-evident for many companies. Now, turning to some of the policy measures that we are putting in place. We have the longer term strategies. We have the SME strategy from 2020. We have the industry policy strategy, which was updated this spring. These set the long-term orientations for what the Commission wants to do at the EU level. They are based on the bigger goals of green and digital transition and building resilience. These are the basis for supporting SMEs in their recovery and in their transition. In the shorter term, one of the key instruments at the EU level implemented at the member state level is, of course, the recovery package and the recovery and resilience plans, which most of the member states have by now submitted. By now, 17 member states have already benefited from pre-financing up to a total of 52 billion. The Council has approved 22 national recovery and resilience plans, and we hope that the rest would follow soon. The measures which we are analyzing and putting together in view of, once we have all the national plans, in view of seeing what this means for the SME community at the EU level as a whole. The measures are numerous. There are a lot of actions in different member states boosting access to finance, aiming to promote investments. It could be startup grants, in other cases green finance instruments. Some aim to foster private investments through equity financial instruments or through portfolio guarantees for key policy areas. A very large part of the plans also have specific actions to reduce the administrative burden and to address regulatory obstacles. There are many actions to support entrepreneurship and programs to support SME research, development and innovation activities. Besides the measures which are explicitly targeted at SMEs, the national recovery and resilience plans have other measures which may look general but which will mainly benefit SMEs. Many member states are putting in place sectoral programs, for instance, to support the tourism sector in their country. Since the majority of companies in the tourism sector or in the construction sector, which is another often targeted sector in the national plans, since these sectors are dominated by SMEs, it is realistic to expect that most of the support will go to the benefit of small and medium-sized businesses. There are also many measures which are implemented through public procurement, and there, of course, companies big and small can participate and can benefit from the money which is spent through calls for tenders in public procurement. Briefly on other things that we are preparing from the spirit of resilience. We are currently working on an emergency instrument for the single market, learning the lessons from what did not work during the pandemic crisis, uncoordinated border closures in some cases, lack of information of what was allowed, measures which were changing on a daily or weekly basis and were not identical across the EU, information which was hard to get, also language issues. What measures can we take to ensure that in the next crisis, which may not be pandemic, it may be a natural disaster, it may be a cyber attack, terrorist attack, anything. We are looking at all this and trying to define an instrument which would help keep the internal market functioning and address the crisis while helping the economy to the maximum during the next crisis. In the Commission's work programme, the timing for that proposal is as early as the first quarter of next year. Similarly, looking at the critical supply chain shortages at the moment, we are putting in place a more systematic monitoring system. We are working with our international partners to find common solutions, and we are trying to see where EU production could be developed or where more funds could be spent on research in the areas where we have the most critical dependencies. And finally, to support the green and digital transition of enterprises, we are working together with you, with the businesses, with other stakeholders to define the needs for each industrial ecosystem. The ecosystems have very different needs. Some need essentially investment. For another ecosystem, the needs for the green and digital transition may be more focused on learning new skills. There may be areas where regulation is the key issue. So we are looking at all this in a very inclusive process to define what we call transition pathways and see how the EU level could help and support the transition. So to conclude, we are in the middle of a very significant transition process, building back better, as we would like to say. Whether this transition will be successful depends very much on what happens with all the SMEs in the EU, and not just how the best cope, but how the whole community will be able to cope with the challenges. Thank you very much.
Very broad challenges, but also very broad kind of responses that are coming up. I know that you will have to leave us during the Q&A, but that Ludger Odenthal, the head of the SME Performance Review Team, will join us on the stage in case there are questions directed to you. Lucia, from the point of view of the OECD, what are the lessons for policymaking going ahead of the crisis towards recovery and more resilient economies for SMEs?
Thank you very much. And well, it's a pleasure, of course, to be here with you. I have to say, not only for the knowledge that has been exchanged in these days, but also for the vibe that one could perceive, that I think it's probably the best testimony about the energies that run through all European countries and on which the recovery must hinge. So where the question is, how can these energies be enabled to become projects, to become growth, to become job creation and value? And we need those energies because, as Uti said, I mean, there is no doubt SMEs this time were very much at the epicenter of the crisis. Much more, I would say, than in other crises, the global financial crisis that, of course, was extremely impactful, but where the small businesses were somehow a side effect of something going on elsewhere, like in the financial system. If we look across all OECD countries, so Europe and beyond, North America, Australia, New Zealand, Japan, Korea, if we look at the sectors in which the crisis hit hardest, from tourism to transportation to personal services, professional, SMEs on average account for 75% of jobs. I think this is enough to say there is no recovery if there is no SME recovery. If we look at some European countries, there is where we find the highest across OECD countries, countries like Greece, Italy. We are talking about 90% of jobs that are in SMEs in those most hit sectors. And if the crisis was unprecedented in size, in scale, also the policy responses that we have observed across OECD countries, we have to say, were unprecedented for speed, for scale, for nature, for the type of instruments that were put in place. We have been monitoring at the OECD the policy responses during the rescue phase, the emergency phase, and now we are doing it for the recovery. And we see that there are, of course, many similarities. The main objective was addressing liquidity shortages, preserving jobs, assets. So the instruments were rather similar, though maybe a different scale in use, from wage subsidies and job retention schemes to deferral of payments, loan, credit guarantees. So the use of debt, and I will return back to that, was quite strong, whereas clearly grants and subsidies depended very much on the fiscal space available to the different countries. So the scale was huge. The structural policies, those that are now at the center of the stage, were clearly not the main focus over the past year and a half, with some exception. In terms of countries, for instance, we have seen a country like Korea that as of the first weeks went structural, so trying to address structural challenges like those related to digitalization. So putting in place, as of the first days, strategies for testing and learning, for familiarizing a lot of businesses with new digital instruments. And in terms of thematic areas, in fact, we can say that if inevitably the rescue packages were more focused on short-term liquidity issues and other short-term emergency, the digital area has clearly been an exception because it was needed for survival. That was very evident. We have been monitoring, as I said, the rescue packages across about 90 countries. We measure the intensity of the focus on different policy areas and on SMEs in particular. And in the case of digital, not only the effort was significant at a large scale, but it was very much targeted to SMEs. So we have been estimating on average something like 25% of the volume addressing digital being dedicated to SMEs. This, I think, is a bit, and Oti also highlighted it, the silver lining of the crisis. The accelerated digitalization that was driven by needs, but it was also very much supported by government intervention all across. Through surveys, we have monitored at the global level the degree at which SMEs increase their uptake of digital technologies, and we could notice a very strong increase from 30 to 50% of small businesses using more digital tools than pre-pandemic, which is, of course, a massive increase. But it comes with some risk. The first risk is the share itself. 50% means that we have another half that, despite the crisis, did not increase the uptake of digital tools. And if we look then at the details of that, we see some risk of widening gaps that I think also Oti was mentioning. First of all, in terms of differences by size. If, let's say, 50% is the average, when we go to micro-enterprises, to self-entrepreneurs, we're talking about 30%, which means that we have a huge share of 70% across the most advanced countries that did not make the digital leap. And even maybe more concerning is the fact that when asked whether they see the changes to last, again, about half of those enterprises across sizes, they mention no, they don't think they will last, which I think is in line with what Uti mentioned earlier about the perception about the future. So that means that we still have a large missing middle of small businesses that are not in tune because of environmental conditions, institutional context, but also capabilities with the changes, the fast changes that are happening. Other aspect also to consider is that when looking at the perception about the opportunities that the crisis offered, clearly the firms that were already digitally mature or more advanced in the journey were those that perceived mostly the opportunities. So those that arrived to the crisis already being somewhere into their digital journey were also those that benefited from the opportunities that also the crisis brought. And again, this is an element of optimism, but also that signal that some gaps may be widening. And then the sector, we noted as well these differences across sectors. So if the acceleration was widespread, I mean, if we look at sectors that were already digital intensive, ICT, for example, the acceleration was much faster than in others, like retail, construction, and transport, where changes happen, but at a much lower scale. So there are some widening gaps there that may call for attention in the recovery phase. So with what concern the recovery packages themselves, the monitoring that we are undertaking is highlighting that by nature, because of their longer term nature, the emphasis is much more on business framework conditions, on infrastructure, on horizontal measures that may benefit businesses overall, regardless of their size. So where the benefits for SMEs are there, but they are more of an indirect nature. A better business environment, better connectivity, infrastructure investment, etc. In this framework, while the volumes have clearly increased also in terms of support for SMEs, the shares have clearly declined. Again, if we take, for instance, the case of digitalization, I mentioned earlier, 25% of rescue measures on digital were focused on SMEs. When we look at the recovery packages, the share goes down to 8% on average across OECD countries and beyond. Where the European Union stands out for a very clear identity in its recovery efforts, so the digital and the greening, which is not shared in other OECD countries, or not in the same way. For instance, if we look at the US or Australia, we see the infrastructure element being absolutely prominent, as well the skills development that is also common across. And then if we look at the overall packages, so beyond digital, the share that is targeted to SMEs is even smaller, 1% of all recovery packages that we're monitoring worldwide that has some SME targeted nature. So the question there is, given the widening gaps and the differences in how SMEs got to the crisis and are emerging out of the crisis, what else is needed for small businesses to benefit from what will be, and that's the plan, a better business environment and conditions? Is that enough to have better framework conditions, or is there a need for further targeted measures to help different types of SMEs benefit from those? And maybe there we have some interesting insight and learning also from the rescue, the emergency packages, where we have seen at least early evidence that the most effective instruments tend to be those that combine different elements. For instance, the financing with the coaching, with the mentoring. So some food for thought also for the future on the degree at which some further fine-tuning for certain categories of SME is needed. In terms of priorities ahead, also the surveys and the policy dialogue in which we engage, and where, of course, the European Commission is a very precious partner. The skill element emerges continuously, and somehow this is also related to the gap, to the delays that were accumulated in the past. If we look at the past decade, in the case of European countries, the share of SMEs that invested in ICT learning for their employees was relatively constant, differing across countries, but we're talking in some cases less than 5%. And over the past decade, when the digitalization had already accelerated to some degree, this didn't change that much. So there is clearly a gap that is not only related to the crisis and the future that has arrived much faster than expected, but also to some past structural weaknesses. And that aspect of the skills is also very relevant for the other side of the twin transition, sustainability. I think we heard also these days in the panel on the subject, awareness, training, understanding the business case for the greening, for the sustainable investment, as well as accessing appropriate sources of finance are major issues. And if I mentioned earlier that the share of targeted measure for SMEs in recovery packages is reduced with respect to rescue, in the case of greening, we really see very little focus on small businesses across OECD countries, where again, the EU approach is a bit of an exception, but there as well with differences than in the detail across countries. And if you allow me for a last priority, maybe I see, yeah, Alexander, I mentioned for financing appropriate sources of finance. This we see as another important priority going forward, avoiding a debt solvency crisis. The level of indebtedness over the crisis has increased rather significantly all across the board, partly also for the type of measures that were put in place. We need to go back to the trends before the pandemic of a diversification of financing instruments available to SMEs and entrepreneurs. Greening, digital, all the transitions ahead, they require a huge mobilization of resources in the ecosystem and at the firm level. And this is, of course, very difficult if firms are dealing with debt overhang. So addressing the financing aspect and what other financial resources and instruments can be mobilized must be part of the discussion concerning a sustainable recovery. Thanks a lot.
Crucial, important point, well worth the time. Let's quickly move on to Ben so that we also manage to hear from your chambers and leave room for 1 or 2 questions at the end. Ben, you have slides, I understand.
Thanks, Alexander. Hi, everyone. Nice to see a full room, and hi to anybody or everybody following us online. I'm sure there are hundreds, if not thousands, if not millions of people out there watching this via the internet. My job here is to provide a business perspective on the topics we're discussing. Of course, we're in regular contact with Uti and Lucia and the colleagues. But as Chambers of Commerce, we want to tell you what's happening out there at the coalface, at grassroots level. And the basis for that is our annual economic survey, something that we've been doing for nearly 30 years now, based on replies from over 50,000 businesses across Europe, not just the European Union, but several neighboring countries as well. And as, over 50,000 businesses reply, we weight the answers according to the economic importance of each country. And the results basically tell us whether businesses feel more or less optimistic about a range of different indicators that we include in the economic survey each year, which relate to investment, employment, domestic sales, export sales, and a general question about business confidence. I'll come on to those in a moment. But before we get on to those standard indicators that we use, we've also this year, for the first time, introduced a question specifically about the pandemic and the implications that may continue to have for businesses in 2022. And I think to an extent it corroborates what Uti and Lucia have said. The main concern among businesses, the main legacy hangover, I guess, from the pandemic, which of course isn't over yet, is a fear of supply chain disruption, as you can see there and as was already mentioned. And the next highest problem that is expected for next year relates to changes in consumer behaviours. I say problem, but it could also be an opportunity. But it's definitely a very significant factor that businesses are aware of, that consumers' buying, consumption habits have changed as a result of the pandemic, and as was already mentioned, they may never go back to pre-pandemic ways. Another fear, as you might imagine, and as I think we're all experiencing a little bit at the moment, is the fear of further lockdown measures. And then we get onto the issue of debt obligations, the debt that has been accrued during the pandemic and the need to pay that off. So those are the main concerns in relation to the ongoing pandemic for next year. A question that we've also asked for the last 7 or 8 years relates to challenges that entrepreneurs may face in 2022. Usually the top two are lack of skilled workers and access to finance. But this year, zooming up the charts from about 6 or 7 typically, we have access to energy and raw materials. I don't think that's a big surprise, but nonetheless I think it's a very striking result that businesses are clearly extremely worried about the implications of rising energy and raw material costs. And that's something that we need to be wary of. There was a special energy council a few weeks ago to discuss this. We hope it will be discussed at the Competitiveness Council next week as well. And I think we all need to be very conscious that this is something that businesses are wrestling with and very worried about for the year ahead. And that doesn't just relate to heavy industry, to manufacturing. It also has a knock-on effect on the services sector as well. And as we're even seeing in our own homes, our energy bills are going up. So that has an implication on even the smallest businesses. Right, moving on to those indexes that I mentioned. The first relates to the national sales, to domestic sales. You can see there are charts since 2008, which shows 0 implies stability, in other words, that businesses don't expect any change either upwards or downwards in the year ahead compared to the current year. You can see a massive drop between 2020 and 21, which of course relates to the pandemic. But for 2022, businesses are forecasting a reasonable increase in domestic sales. Not huge, but nonetheless a positive increase. So the orange bit at the end is the new data that we have for the year ahead. So that's what we should really be focusing on. But it's also, of course, interesting to see the chart over the last few years. So there's a big increase just before the pandemic and then a massive drop after or during the pandemic. And now we're seeing an increase again. Moving on to export sales, again, a big increase, and I think that's something that we can be encouraged by. Nonetheless, there are concerns, there are worries about certain obstacles that businesses may encounter. We saw, as you can see, a number of increases towards the end of the last decade. It went up and down a little bit, but this increase, again, would seem to reflect the fact that businesses expect their export sales to go up, but they're still concerned, as I mentioned, about supply chain disruption, further lockdown measures which could restrict their ability to trade internationally. Otherwise, we might have seen an even bigger upturn for next year. Then moving on to employment. Again, we see an increase. Businesses expect to be able to employ more. They will need to employ more people. Again, that's positive. We can hope that will see new opportunities. But I think it reflects the effectiveness of the short-term measures that were taken by policymakers to avoid unemployment during the pandemic, and that gives us a reasonable basis as businesses to start growing again, rather than having to go back to square one and find people and rebuild the workforce. There is, as I mentioned at the beginning, still this concern about the skills mismatch, about being able to find people with the right competencies to be able to fill vacancies, and that's something that we'll need to be aware of as well. And again, I think probably means that upward curve isn't quite as high as it would otherwise be. I'm zooming through these slides because of time constraints, but I'm happy to take questions afterwards. The next one is about investment levels, and there too, up a good increase forecast there, as businesses will be in a sense compelled to invest to comply with the twin transition requirements. That of course has an implication for investment that is very significant, and we've discussed that in a number of sessions over the last couple of days. But this overall is the indicator that sees the highest expected improvement year on year. So I think that's a positive signal, because if investments are going up, it means that business confidence is going up as well. And that leads me on to the final indicator, which is business confidence. This is a question, are you more confident about the year ahead, or are you less confident about the year ahead? And there we see a really positive, encouraging increase for 2022, which suggests to us that businesses are optimistic that the recovery that we're already seeing will continue, probably reflecting the figures that Uti set out a few minutes ago about the growth forecast that was in the autumn economic forecast that was presented last week. So yeah, the direction of traffic is encouraging, and the general picture is positive. But there are a lot of variables at play, a lot of question marks about what may or may happen. Some of them are directly linked to the pandemic and are a hangover from the pandemic. Others are longer term, deep-rooted issues that we need to address together, and it's really important that we do tackle them effectively if we are to maintain the recovery, which leads me on to my final slide, which is about our policy recommendations that we would extrapolate from these results. The first of which is a business-friendly regulatory framework. We've got to get that right. We've got some really important EU policy legislative dossiers coming out soon, not least the corporate due diligence package that's due out next month. They have to be SME friendly, otherwise we're really going to hinder the economic recovery. And as President Leitl said yesterday, that's one of the reasons we keep going on about the need for an EU SME envoy. We need somebody in the Commission who is reinforcing the message that every proposal, whether it's from GROW or from another directorate, is conceived from the perspective of small businesses and is business friendly in the way that it's developed and, of course, implemented afterwards. We need to tackle the skills shortage issue. At European level, there are things that can be done. Of course, education and training is a national, or even in some cases a regional competence, but at European level, there is also a lot that can be done, notably around mobility, about comparability of competencies, and enabling people to develop vocational skills that correlate with the needs of businesses. We need to help with the energy transition. I was just in a session before about environmental and sustainable corporate governance, and we talked about the need to help businesses not just by providing financing, but also by providing advice and support in that process. And again, I think a lot can be done at European level to help with that transition. We need to make the single market work. The single market was hindered during the crisis. There were a lot of border restrictions imposed immediately upon the start of the pandemic. They were relatively quickly tackled by the Commission and the Member States, but nonetheless, some of the long-standing barriers to the single market that even predate the pandemic need to be tackled effectively if we are really to capitalize on the potential of the single market as the largest trading bloc in the world. And that leads me on to the last point, which is about the need for an open, resilient European trade strategy. If we want our SMEs to trade internationally, we need not just to sign free trade agreements, but we need to make sure that they are usable by the small business community, that an SME, even a micro business, is able to sell its goods and services as easily in its own country or in the EU as it can with Japan or South Korea or the US or another economy around the world. So we need an effective European trade strategy based on a really assertive, positive European trade policy. That's everything from me, Alexander. I hope that gives a bit of food for thought, and I'd be happy to take questions from the colleagues afterwards. Thank you.
Thank you, Ben. We're running a bit late, but I think given that we started late, we can give 5 minutes to questions. So if there are questions from the audience, please raise your hand. We have a microphone over here in the center. Let's start in the center. Please be concise. I can repeat your question.
were mentioning the recovery as SMEs and this is better, and the single market. We very much welcome the initiative of the Commission to introduce the emergency instrument. However, what we see now, even though we all wish that COVID was behind us, it's not yet the case. And more member states, such as Austria and France, are introducing new measures that probably distort and disrupt the single market. And I was wondering what the Commission is planning to do to make sure that we have a European harmonized approach, not only in the future crisis, but also today. Thank you.
Ludger, a question for you.
Yes, thanks. It's a very good question, but at the same time, as sort of pretty much all good questions, also very difficult to answer because it's precisely such a fluid situation. I think we, as Commission, we have made imminently clear in the last 12 months, to communicate with member states to ensure that whatever they do to fight the pandemic, that this minimizes the harm on the free flow of trades, of goods, but as well as people, so to preserve the single market. It is, I have to say, it's obviously, given it's a fluid situation, and governments also very much on the spot sometimes decide, okay, now another lockdown, It's of course very hard for the Commission to come in every time and say, look, here and there, keep that in mind. We are doing that, but of course, at the end of the day, we have to respect, member states as they, take the prerogative and say, well, for safety reasons, we have to do it this way. We are trying to also exchange the knowledge among member states to say, okay, yes, you can, curtail certain things, while at the same time, for safety reasons, but at the same time encourage, sort of still allow activities going on. Yeah.
One more question from the audience in the center.
Hello, my name is Alexandra and I'm here on behalf of the European Parliament because I won a pitching competition for my business ID. I am starting Bolivia's first recycling system and taking on the technology of biogas. We are currently looking for funding, so any help is welcomed. My question is, you are planning for the future, but where is your bridge to the next generation? Because this information cannot get wasted, so I just wonder, do you have any plan to really reach out to more people, not just us in here, and how are you sure that everyone really gets this? Yeah.
How are we reaching out beyond the current stakeholders? Lucia.
Yes, that's a very interesting question because I think it's a bit at the core of our missions, because we want to do analysis, we want to talk with the policymakers, but then in the end help having an impact on all. And what you mentioned about reaching out in terms of sharing and information, I think it's key, because what the crisis has also highlighted is that in some areas awareness is still an issue. Awareness in terms of the transformation taking place, in terms of the tools available. We see, for instance, at the level of many small businesses, the problem in navigating the information that is out there. So having some navigation plan and being able to distill the information that is really needed. I think that this cannot be done alone by policymakers. There needs to be an alliance, not only for information sharing, but really also for thinking about the policies for the future. And this is, I think, an area where we are all working, establishing new types of alliances that engage all the ecosystem and that also look at those that typically are out of the information network in terms of maybe vulnerable groups. For instance, we have seen youth and women having more difficulties in accessing the information and the tools during the crisis. It's an alliance that also needs to be established with the private sector. Of course, with all the principles of open market and competition, But we need really, I think, to work together. We are doing, for instance, in the case of digital, we have an initiative, Digital for SMEs, that aims to go beyond the usual borders of the stakeholders with whom we engage, where we are trying to engage all the players in the ecosystem, but also the entrepreneurs themselves. But again, I think that this needs to push for a public-private sector alliance that is to mobilize resources, is to reach out to the different players, including those that may have more difficulties in accessing information and instruments.
Ben, some thoughts?
Yeah, if I could just add, well, firstly, congratulations on winning the prize, and as you're representing the European Parliament, I'd encourage you to check out the SME intergroup within the European Parliament, which we work with very closely, and in fact, one of the co-chairs will speak in the next session, Martina Dlabajova. They're doing a lot of good work to try and raise the profile of SME issues among members of the European Parliament. We do need, of course, new generations of entrepreneurs. Apparently, I saw some data recently that suggested that fewer young people are inclined to become entrepreneurs since the pandemic than before the pandemic, which is a worrying trend, and that's something that we should try to reverse because there are opportunities out there. The startup environment in Europe is good now. We used to beat ourselves up about this, and also being able to scale up your business, there are improvements. There are more unicorns coming from Europe than there used to be, so things are moving in the right direction, perhaps not as quickly as we would like. So there really are opportunities for young people to take entrepreneurial initiatives, and we just need to make sure that they are willing and able to do so, and that they see, they don't see the pandemic as a reason to go back to that perhaps old-fashioned view that a job in the civil service or in a relatively safe context is a better option than pursuing your entrepreneurial dreams.
With this, I'm sorry, we're running out of time. The next session is starting in a second. We leave it for the corridor. There is no recovery without SMEs. And we saw quite a few different takes and different initiatives. We learned that there's not going to be a new normal that is the same as the old normal. There are challenges ahead. And especially as we enter the fourth wave of COVID, we're not quite out of the woods yet. But we see a lot of initiatives, a lot of actions being taken. I think we should end on a positive note here and give a very big thanks to our distinguished panel and Udi, who you will see in the final session as well. Thank you very much.